What's up everybody, welcome back to the 10k to 100k challenge. In this episode we are going to talk about this trade that I called in the private Discord group right here, where I shorted waves at 8.03 and my target was 7.67, and that indeed got hit. Now just to show you that I did indeed execute these trades, right there you can see the red arrows and the blue arrows. Now, full disclosure, I did not actually make any money from this trade, and I'm going to get into why in just a little bit, but the idea was correct. How was I able to predict that price would drop from here, just take a drop down to 7.67 like pretty much instantly? From the time that I opened this trade until it hit the target was about 4 hours, and it was about a 5% drop. Now, if you want to figure out how I exactly predicted this, you're going to want to stick around to the end of this video. And just remember, if you want to follow along with the trades live on the 10k to 100k challenge, as well as get access to the trades that not only I am calling, but my moderators as well as get access to trading calls that will fundamentally change the way that you trade, then you're going to want to check out the link in the description box below at the website. This is where you're going to want to join. But anyways, let's dive back into the trade. So, to figure out how I first stumbled upon this trade, it is very simple. I was taking a look through the charts and I just happened to see that this chart in particular right here was interesting because it had just been rejected at the previous monthly mid-range and it had formed a previous weekly high. Now, it was just rejected very close to the previous monthly mid-range, and I'll get into why that matters. Now, if I just draw a fib from this swing high right here at the previous monthly high to that swing low right there, you can see that it got rejected essentially at the 0.5 fib, which if you have been following this series at all, you would understand that, especially if you're a student of mine, then anything that trades above the 0.5 is essentially in a premium, and anything that is below the 0.5 is in a discount. Now, whenever price taps into the other, like over here, it was a discount, right? So the algorithms would want to put it back into equilibrium. So in that case, this is what that is, right? This massive move here in the course of like 3 days, where the price literally 3x'd in 3 days. This is just the algorithms that are accountable for about 80% of daily trading volume, trying to put price back into equilibrium. So it did here, and it got rejected. Now, that is the first sign that we want to look for, right? In this macro range here, from this range high to that swing low. Now, you might be wondering, why did I use this one? Well, because it's the previous monthly high, and you can see that this move right here started from that point onwards to that point here. Now, you could say that, hey, this right here is a swing high as well, where, you know, the high of the candle is higher than the two candles right next to it. So this could be a swing high as well. Why did I not draw the fib from here to here? Simply because this is a longer term, more significant swing high. And because of that, I use that one. And as for how you have to figure out, like, hey, is it supposed to start from here or is it supposed to start from here? Whatever, that comes down to experience, and you will learn that over time. So if you cannot yet see things happening on the charts as they happen, then please do not get discouraged. There are people doing this for years and decades, like 50 years, and they did not just magically get to where they are now just from a stroke of luck. So if you're just beginning in this journey, remember that 90% of the people in financial markets in general are losing traders, which means that just to be profitable, right, 10% are profitable, you need to be better than 90% of the rest of the market. So when you think of it that way, yeah, you know, you're supposed to take your improvement seriously and really put some work into this, right? Because once you spend more time in the markets, then you will be able to identify, hey, that's the low that that's the high and low that I want to look at, right? So that is the first signal, right? It got rejected at the mid-range of this macro range, which is on daily chart. And remember, you always start your analysis out on a higher time frame before you jump into a lower time frame. So after you have taken a look at the macro time frame, such as the daily chart, now you dive into the 4 hourly. Does anything confirm your theory that price, after getting rejected by the macro mid-range, is it going to have any indication of going down? And as you can see on the 4 hourly here, not only have you broke structure right there, this is a 4 hourly chart, which means it's high enough, right? Right there, you have relatively equal lows as well as there. And in this move right here, you just broke the structure. Right, so that's the first signal that shows you that price is shooting for somewhere lower. Now, bring your attention back to the chart on the daily. I want you to take a look here, right? This right here is a fair value gap. notice how there is absolutely zero price action going on here. So that is what led me to believe that my target for this trade as a moonbag right there, 6.86. Now, 6.86 would have been right here, right here. And I'm going to get into why. Once you get into the 4 hourly, you should be able to see it closer. Right there is a 4 hourly fair value gap where there is zero price action here. And remember what I say about imbalances, imbalances always get filled, and hence this is my target, which means that since this target has not been hit, I'm actually still looking for short trades on waves to fill in that target. And from this current point onwards, it is about 12%. So you can still make a lot of money. So do not let anybody discourage you saying that, oh, it's going to be crypto winter, you're not going to be able to make any money. That is a lie. You can make really good money just catching these swings right within the same 4 hourly candle. You can make very, very good money trading these. Like, I'm talking thousands or tens of thousands of dollars, like every month, like hundreds of thousands even. So seriously, once you get this strategy, down pat, you're going to be set, essentially. So that is the reasoning for my targets. But 7.67 remained to be a key first target for me. And the reason for that is because it is a previous low. Now, I want you to bring your attention now to the 1 hourly chart. And I want you to take a look here. Even though the price was technically supposed to hit this level first before pulling back, right? I want you to see that this down move right here that started here, I would have figured that it will at least take out this level first before rebounding. And the fact that it didn't means that the market makers are trying to engineer more liquidity into these markets, which means that not enough people are going long for them to want to take the price down one last swing in order to fake everybody out. And this is something that they do a lot. Now, you always want to think from the perspective of the market maker. If they're doing this right here, they are inducing traders, especially retail traders who do not know better at all, to go long. Like chase price, oh, prices just broke through resistance, you should go long here. And the moment that they go long there, they're going to reverse the price because now they have enough liquidity. Now they have enough people bought into these prices, like willingly buy into these high prices. Now they can reverse it, right? And now they show their true colors, which is this level all along. And as you can see, that is where I jump in and, just go for the last swing. You don't need to catch the whole swing. Even just this tiny trade here, I want you to take a look here at the trade that I gave, right? The stop loss is worth 0.05 points. Meanwhile, the target from the initial entry was 0.40, which means that this trade would have returned 8R, which means that if you were to have risked, let's say 2% of your account, you would have been up 16% on your account, which means on a 10K account, this would have made you $1,600 in just a single trade. So even just these tiny moves, as long as you have your stop loss and risk management down pat, you can make very, very good money, right? Now imagine if you catch the biggest move right here. This is something that I don't think I'm going to be touching on in the 10K to 100K challenge. If you want to learn more about how to do something like this, the trading course is going to be the place to be, and that is going to be in the private Discord group. But even just with this, right, you can make really good money, by the way. You can make really good money. But anyways, at the moment, I do think that it is not going to be, even though this is called like a so-called falling wedge pattern, I do believe that the price is actually going to target 6.91 or give or take before any further advances upwards. But at the same time, you do have a lot of support at the previous daily low and the daily open. So we will see if this falling wedge pattern really does play out and come to this point of resistance right there before, continuing upwards, or am I going to be right with this being the target, the ultimate target before this, everything here is literally just inducing traders, right? It's engineering liquidity until the real target gets hit, and then you can see what happens next. But we will see if I'm right or not. For now though, this has been a little bit of a shorter video. Let me know in the comment section below if this format is something that you enjoy, or do you enjoy the deep dive sessions from before. But for now, like this video, subscribe, stay tuned for the next one, and I'll see you in the next one. Bye bye.